Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Tuesday, the 1st of October. Here we come, Q4, the Tuesday, the 1st of October, Bull versus Bear webinar. Steve Miley here on the call for trade day. Just a quick note in here in case you haven't seen, we have gone on sale today, through till next Friday, 50% off. That's 50% off all accounts from 50,000 up to the 250,000K account. So from the 50K, the 100, 150, and 250K, all on 50% sales, our deepest ever sale. So jump on that. You've got from now until next Friday to sign up. So good luck with that. So let's turn our attention. We'll go for our usual run through in here today. We've had the HCOB, which is part of the S&P Global data in here for the manufacturing PMI for the Eurozone, for Asia and the Eurozone in here. But focusing here on the Eurozone, you can see the numbers all in green in here, all slightly better, not massively better, but slightly better than anticipated. So all positives there. We've also, the biggest positive though was the CPI data, which came in line with expectations, the preliminary data for the whole Eurozone, but below, and critically below the headline number, the CPI number, at 1.8% below the ECB's headline rate in here. And that's sending bond markets and equity markets higher, along with this PMI data, with hopes for market now pricing in a rate cut for the ECB at their next meeting. Looking ahead in here to what we've got coming up, well, we've got the 9:45, we have the S&P Global PMI, manufacturing PMI data, but more significantly for the US, get the ISM data 15 minutes later at 10 o'clock Eastern. So 9:45 and Eastern, and then 10 o'clock Eastern, first the S&P Global, then the ISM US manufacturing PMI data. Also get Bostic on the wires in here later today at 11 o'clock, and then also at 18:15, so 11 Eastern and 18:15. So watching out for those as well. Just going back to Powell yesterday, we got this on the on all the numbers that we're going to, all the articles we're going to run through. But Powell in here, if anything, probably sitting a little bit more hawkish than we would like, so by hawkish I mean less dovish, so hawkish de facto, less dovish, indicating that they will go at the pace necessary. So we'll take a look at that as we go through now, starting with 5 things to start your day. So there, look, Powell on rates. Federal Reserve Chairman said the central bank will lower interest rates over time, so emphasize that the economy remains on solid ground. So maybe in here indicating maybe not as dovish as we maybe thought. Okay, although when we come to the Fed Watch tool, you see it hasn't really significantly shifted. Larry Fink, this chief executive at BlackRock, is also saying the market pricing in too many Fed rate cuts. I kind of tend to agree. I think the market's got a little bit of ahead of itself in here at the moment after we had the 50 basis point cut, and I think the market is a little bit sort of pricing a little bit too much easing, particularly between now and the end of the year. We're basically pricing in getting really more towards 75 basis points. I wouldn't be surprised if the Fed go 25 at the next 2 meetings into the end of the year rather than another 50 and 25, but we'll wait and see. It says in the US stocks are edging lower in here, but we've rebounded since I think this came out. And treasuries are up. European bonds are certainly up, with hopes of European ECB rate cuts, as I said, with that data. And Chinese stocks continue to outperform their global counterparts with the stimulus package that was announced last week. So there's the headlines on Powell from yesterday. Powell says Fed not in a hurry, will lower rates over time. Fed chair repeats interest rate not on a preset path. Says recent price figures point to continued disinflation. Futures dip ahead of Labour data. So that's the Labour data we've got coming in the later today with the I assume it's meaning the PMI data there, unless it's talking about the Labour data we get on Wednesday from ADP. Powell signals modest rate cuts. What are they talking about there when they say awaited labour market data? And maybe or do we have the jolts? Do we have jolts today? Oh yeah, jolts. Sorry, it's the jolts data. So yes, we should watch out for the jolts data as well. Sorry today, guys. So we get the S&P Global Manufacturing PMI at 9:45, 10 o'clock Eastern. ISM Manufacturing. It's the jolts jobs openings, and then tomorrow we get ADP as well. So and then Friday, obviously the actual employment report. So not in a hurry. As I say in here, that one there pointing ahead of labour data and also that PMI data. BlackRock Think. There's the icon for Think. The market's best is wrong on Fed rate cut bets. He said it's the market's too dovish. Bond rally gets fresh fuel as data fans rate bets. This is talking about the European markets in here. Another 25 basis point cut by ECB in October gets priced in. That was after that data today. European government bonds going higher in price, lower in yields in here this morning. And President Lagarde said the bank is becoming more twitch again. Price pressures under control. As we say, the European Central Bank's 2% target rate will be below that target rate, 1.8%. So, as expected, but nevertheless, the numbers come through as expected. Bonds rally, that's European bonds, and it's nudging slightly on US bonds as well. Dollar firms as traders ponder rate cuts in here. Stocks kick off Q4 up at their record highs or near the record highs. Euro inflation undershoots. We've already covered through that. Eurozone inflation dips below the 2% level, strengthening the rate cut case. And if we look around the exchanges on the overnights, Hang Seng 2.43%, Nikkei 1.93, rebounding, having lost ground the previous session in here. European stocks slightly higher in here. The FTSE, the UK FTSE up 0.3%. A quarter of a percent up on the German DAX. The actual CAC, though, French market down a quarter of a percent this morning. And US stocks in here kind of a little bit mixed, little change, but slightly, if anything, slightly higher in here. I think the previous article was a little earlier, but up a quarter percent, a little change on the S&P, but slightly higher as well on the S&P, quarter percent up on the NASDAQ. CME Fed Watch Tool, we looked at this yesterday, still pricing in now. This kind of shifted, was around the other way, but to here is now only pricing 60% chance. So still, we're not far off 50-50, right? It's 40-60 between a 50 and a 25. I'm thinking we're going to go 25. And the market, though, still pricing in here. This is 75 basis points cut. So you've got 50 and 70, so 68% in here, or 67% in here chance of a 67% chance of 75 or more, and only a 33% chance of 50. And I'm in this camp. I think they go 25-25 on the next two. But that's my 2 cents worth. Bond yields in here nudging lower, higher prices, lower yields, being assisted to lower yields by the rally that we're seeing in European government bond markets. And in our analysis, we remain bullish in here bearish on bonds in here, apart from the short end in here. Flipping. Sorry, I flipped to bearish. Sorry. Flip to bearish, and we're bearish across the board in here. So it's pricing to lower prices, slightly higher yields, despite the moves we're seeing in here on the overnights. But on the stock indices in here, despite the dips lower in here, we did dip and then rebound late session in here. So we saw significant rebounds, having dipped lower and staying bullish. And if we look at the charts look kind of quite positive in here, because the significant rebounds that we saw after the flash lower in here yesterday and the nudges higher that we're seeing this morning. This is the ES, and here's the NASDAQ on the daily charts in here. It's kind of a rejection of the downside. So you kind of got a hammer pattern in here, having had a dip lower from the end of last week. A hammer pattern in here yesterday, pushing the market back higher and then nudging higher in here this morning. Similar story on the ES, and it's not quite as same kind of hammer pattern, but certainly a downside rejection would go lower, and then a strong rebound yesterday, and then nudging back higher, and saying it's pretty much sitting at the moment out or near the all-time highs here on the ES. So still remaining bullish, and you can see that kind of downside rejection here on the 30-minute chart. So we get the sell-off and then a really big rejection. The market then chopping a bit overnight, but then resolving more to the upside in here going into this morning pre-market open. Again, that chop lower and rebound, not quite as emphatic on the NASDAQ, but nevertheless, pointing back higher. So remaining bullish in here for me as we go into the day, still looking for further upside for today. But all eyes really on those data points in here today. So say 9:45 S&P Global US Manufacturing PMI, 10 o'clock ISM Manufacturing in PMI, and then also the JOLTS jobs opening at 10 o'clock. 1 hour later, we'll get speech talks from Speaking engagement from Bostic, so watching out for what Raphael Bostic's got to say, and he speaks again. Probably won't add in too much at 18.15. All right, guys, I'm going to wrap it up there. I'm going to remind you we are on sale. Use the code OCT, OCT for October, OCT50 with 50% off in here. So OCT50 on 50k counts and above. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back. If not, I myself, Duncan, will be back tomorrow with another bull versus bear webinar. Take care, stay safe. Bye.